Hello and welcome to the channel. Hope you're having a fantastic day. Today we're talking about a stock that actually looking, in my opinion, looking really good. But we're going to determine whether it's a buy, hold, or sell. And we're going to go through the full technicals. And I'm going to talk about what's going on with the company, why the price is not where it should be, and where do we see a potential for the stock. All right. So the company we're talking about is GGPI. And before I get into the technicals, if you're new to the channel, please do subscribe to the channel. The objective of the channel is to get you guys information that is that I'm using for myself and my friends and family. And I wanted to actually make the videos and help others as well, because I feel that, helping you would help me in reverse, So let's build that wealth together. So let's talk about that, right? So GGPI, it's a company that's actually having a reverse merger with a company called Polestar. Polestar is an EV. It's a Swedish-based electrical vehicle company, right? And they're having a reverse merger. And Polestar is not publicly traded right now. Okay, so if you were to look for Polestar stock, you will not find it because they're not traded at this moment. So GGPI has been around since last year, and they're having a merger with this. Now, the reason, so somebody would think that the stock would really be, good position right now. But the problem is with the market right now, that these growth stocks, that anything that is coming up new, a lot of investors are not taking chances on the new stocks. Okay, mostly they think that they want to put their money in a stable stock. The reason being is, if it was not a situation where we in inflation, or the Federal's not saying that they're gonna do a rate hikes, 7 rate hikes this year, it would have been a different story. The stock would have been definitely up there, in like 30s or 40s. But the problem, the stock is in 11s, $10 range, is because of the fact that there's not a lot of money being pumped into the stock, and that is because of the market instability, right? So let's talk about, so again, they're having a merger with the Polestar, and as you know, like with the EV, anything that is the electronic vehicle, and they have delivered. So Polestar did deliver 29,000 cars, so it's not like they're not in the game already. Like, they're good, like they already have potential, they already have customers, clientele, and et cetera, et cetera. And anything EV right now, I think it's a future long-term stock, because the fact of the matter is that everybody is regulating. Even U.S. said by 2035, all states should have, or I think it was over 50% electrical vehicles on the road. So there's a lot of aggressive deadlines that everybody needs to meet in the country, like in U.S. and other countries, et cetera, et cetera. So these are long-term stock. So let's look at the value of the stock, right? So GGPI is $1.1 billion company. They do trade about 3 million shares on an average every day. Yesterday, on Friday, they closed at 2.2 million. EPS is negative 8.2, which again, they're being not profitable does not indicate that stock is bad stock, or should not be getting into that stock, because these indicators, usually it depends on if they have already filed their 10K, or this is more from 10Q. So 10K usually is audited. 10K is usually audited. 10Q is just whatever they put in, adjust their earnings per shares and try to drive away the shareholders, or drive in, like, depending on how the institutional banks are holding the stock, right? So institutional banks, these are the big companies like Morgan Stanley, Vanguard, State Street, all these big companies. They own 31% of the company, and 50 of the holders from the institutional banks have sold their position, and then 42 of them got into the position, right? So now that 50 that sold their position, it not necessarily means that they sold out completely, right? That could have been that they might have taken their profit when the stock was initially launched. For example, we'll give you an example right here. Let me go to the monthly chart, and I'll show you that it could have been that they have sold out their position, because at the point when they got in, at $9 mark, for example, and when the stock was launched and the stock did hit a peak of $16, they might have taken their profit and let the stock fall, and then you see a lot of red candles. That could have been just institutional banks taking their profit, and these greens probably were just all retail investors trying to get in, right? So let's look at the stock right now, where the stock is, and we'll talk about where the value is, right? So now, let me just zoom out a little bit. I do have a couple of indicators that we're going to go through. We're going to go through the support and resistance. We're going to go through the exponential moving average, and we're going to go through RSI and MACD, right? And determine if we can even make money between these two support and resistance right now, right? So currently the stock is trading at around $11.18. There's a support on the stock is at around $10.57, and there is a resistance at $11.88, which with support and resistance, what they do is their limit orders, they usually kick in around this time, right? So let's say when the stock dropped, right, there was a lot of limit order that kicked in to buy the stock at this price, and the stock rose again, right? And then, and people, took the profit, the stock comes out again and get all the way, when it goes down to support all the way, the limit order kicks in again and the stock rises again, right? If it goes up again, limit order will kick in, the profit, folks will take their profit, stock will start dropping again, and then people will start taking their profit and let the stock fall again to the support. Usually that's what happens. It's not a buzzer, like, it's not what you call it. It's not the ultimate thing that this actually happens every time, but that's generally is 90% of the case. Okay. So let's talk about the exponential moving averages. Okay. So right now, whenever the moving averages crosses underneath let's say I'm on a 13 period, which means the last 13 candles. I'm on a 48 candles, 48 periods, and I'm on a 200 candles. Okay, that's 200 periods. So if I'm on a daily chart, that's 200 days. That's 13 days, and that's 48 days, right? So anytime it crosses, so 13 days crosses the 48 days underneath, the stock price will fall as you see the red candles, and you see the stock is falling. And when it crosses above this brown line, the 48 period line, right? When it crosses that, the stock generally rises, and that's one indicator, right? The other indicator is relative strength index, which is the RSI, which tells you how much what is the market pressure. Is the market is going to buy the stock or sell the stock? Right now, it's residing around 53, which means the stock it's going in the being in the direction where it will be bought. Like it wouldn't be oversold. It will be started. People will start buying the stock, right? So you see the green candle sort of indicating that. And then we also have a MACD, moving average conversion diversion, which means that if this moving average started going up, right, which looks like it's gonna start picking it up, it could get rejected and it start going down, and the RSI started going down, and moving averages also started going down. The stock is gonna fall again to the support. However, if it crosses this, right? Let's say if it crosses this and you crosses this $11.41 mark, for example, it's gonna start rising to $11.90. That's almost 40 cents difference. And if you have a few shares, you can make a quick money on that as well. But again, not a financial advice, something that I usually look at, and I usually do my own valuation every day and sort of trade into it. But I think this is, again, the stock. So if the MACD started rising, which looks like it is going to rise, and the moving average, exponential moving average is also sort of looks like it's going to meet and increase. So if we go down, for example, if I could find an example, like for example right here, right, the stock price was trading at around $11.16. The stock price was trading at around $11.92. The moving average crosses the 48 periods, and the stock price rose to $12.45. And then it started going down. The stock price started going down. So it looks like that right here, moving average is about to cross. But we're going to find out, right? Because usually when it gets closer, it could get rejected. Like you can have some limit order kicks in and then it goes down again. Or if it crosses, the next stop is $11.90. Again, this is, you could trade it like on a daily chart, like a swing trader, like buy it, wait for it to go up, hit that resistance and then sell it, wait for it to go down again. Right now, I don't think it's going to go any way above 1190 at this next few days. I think it's still going to fluctuate between these two support and resistance for next few days. I could, of course, and there's always a possibility of the stock falling down, because again, we're not out of that Ukraine-Russia situation, so that's also you got to keep in consideration. But to me, right now, I think if anybody is looking to get this, you just look at these support and resistance, look at the timeline here, the RSI. You can add those indicators on your chart, RSI and MACD, and see how they're crossing. If they do cross and this started going up and exponential moving averages started rising, I think you could definitely make at least 40 cents or so on this swing trade. So again, this is my quick review on this. I think for now, again, anything EV, in my final opinion, anything EV, it's a long-term hold. If you want to trade it like a swing trade, that's fine. You could make a couple of bucks, but in all reality, I think anything EV is like, I'm looking at least 3 to 4 years of a play. It's hard to tell right now because all vehicles are on gasoline. Eventually, when there's going to be regulations kicking in, I guarantee you these stocks will start picking it up again. Nobody can predict the future. This is my opinion by looking at the market from the last few years, what I've noticed. And I've been looking at Tesla when they launched a long time ago, and we look at Tesla now, right? Nobody ever thought about those companies will do. And I remember when these startup companies and the growth, it's very hard to start thinking about putting money in those, because again, that's your hard-earned money and you don't want to waste it. And there's always a chance, right? If the company doesn't make it, you can lose your cash, right? But I think it's always better to have something and not have anything, right? Like, you can have 10 shares, for example, $100 worth of shares, and let it be there. And at that point, if the stock rises to $500 or $200 or $300, and now I'm talking about the money that you would not need, and you think you could spare that money. But this is my opinion. This is how I do it. If I see a startup company, a growth stocks, I usually put in some money in there just to keep myself looped into it. There's a lot of stock that I make videos on. I'm invested in them. A few days ago, it was at 28 cents. I picked up around 33 cents. I made a video about it. The stock is at 73 cents right now. Now, I sold few that I picked up at 33. I bought a few. I sold them, and now I picked up again when it fell to like 60s mark again, because I noticed that the stock is still going to go up a little. I think it's going to go on to $1. So the fact of the matter is, VN has been around for a long time, but the fact of the matter is that you got to have some money on the side always to play, okay? And everything is not a diamond hand, everything's not a long term, but these EV stocks are long term. When you put the money in, you'll have to forget about it. Unless you're making like 40 cents or 30 cents or $1 gain, for example. But if you have money that you could, and of course, there's nothing wrong with making a 40 cents or $1 gain. That's always there. But again, this is my opinion. I think, I would be definitely getting some shares of this on Monday, because I feel like it's definitely looking to going to 1190. This is what I'm gonna do, and this is what I recommend for my family and friends. And you guys look at this video, look at the chart, and then determine whether it makes sense to you. But to me, it's like 90% is a long-term play, and because it's not a hit right now, is because of the fact that a lot of folks are taking money out of the market, putting it into stable stocks. And I guess where it comes down to, the last point I'll make here is that the higher the risk, the higher the reward. That's understood, right? So there's always a chance. It was my quick video now. I hope you guys liked it. If you did like it, please do give it a thumbs up and do subscribe to the channel. Talk to you guys in the next video.